Have you ever opened your banking app, seen a nice, big number sitting there, and just felt secure? Like you've got it handled? Well, what if I told you that feeling of safety could be a total illusion? What if that safety net is actually a trap? One that's quietly draining your financial future. Okay, let's get into it.
This quote from MoneyHub founder Christopher Walsh really gets to the heart of it. When it comes to money, just hoping for the best is a failing strategy. Things don't just sort themselves out. If you aren't actively telling your money what to do, you're basically choosing to lose. And that's exactly what we're going to unpack in this explainer. So first, let's just paint a picture of the reality for millions of people right now. So many of us are living in what you could call the financial danger zone, even if it doesn't look that way from the outside. Check out this number, 3.6%. That was the recent personal savings rate in the US. Let that sink in for a second. That means the average person is putting away less than 4 cents of every single dollar they earn. This isn't just a random statistic. It's a huge warning sign that shows just how many people are living right on the edge, with absolutely no cushion. So why is this happening? Well, it's kind of the perfect storm, isn't it? You've got crippling debt from credit cards and loans. The cost of literally everything, food, gas, rent, is going up. Then you have those sneaky subscriptions that just bleed your account every month. And of course, there's lifestyle inflation. That thing where you get a raise and suddenly your spending goes up right along with it. It's no wonder it feels impossible to get ahead. And this brings us to the core of the problem, a massive misunderstanding that is costing people a fortune. I like to call it the great cash illusion. This belief that having a big pile of cash in a savings or checking account is the safest thing you can do. This chart just lays it all out. It shows the huge gap between how we feel about our cash and what's actually happening to it. On one hand, you feel secure, right? But the reality is, your money is a depreciating asset. It's losing value. You feel in control because you can access it, but it is guaranteed to buy less tomorrow than it does today. You feel responsible looking at that big balance, but what you're really doing is missing out on the one thing that truly builds wealth: growth. And here is the villain of our story: inflation. Now, this isn't just some boring economic term you hear on the news. Think of it as a silent thief. It is actively, systematically, and constantly stealing the value of your hard-earned cash, every hour of every day.
Let's make this real. Imagine you have $10,000 saved. After just 1 year with 3% inflation, that money now only buys you what $9,700 would have bought you last year. Poof, $300, gone. And even if you stick it in a typical high-yield savings account, you're still losing. You're in a race you can't win. It's a guaranteed loss hiding in plain sight.
And if you think it's not a big deal, come on. A Chipotle burrito, it went from like $8 or $9 to almost $12. The average price for a new car has jumped by $10,000 in just a few years. This isn't theory, this is your wallet. Your cash is buying you less and less.
Okay, so if hoarding tons of cash is the big mistake, what's the right move? It's not about having zero cash, not at all. It's about understanding what cash is actually for, and then holding just the right amount. The cash you do keep has one and only one primary job: to be your emergency fund. This money isn't an investment. It's not supposed to make you rich. It's your financial firefighter. It's there to protect you when life inevitably throws a curveball at you. Its job is insurance, not growth. That's a crucial distinction. So, how much do you need? It's actually a pretty simple formula. First, add up your must-have monthly expenses: rent, food, utilities, the basics you need to survive. And this part is key. Base this on your expenses, not your income. Then you just multiply that number by 3 to 6. That's it. That's your safety net. Any cash you have above that number, that's what we'll call excess cash. Okay, so once you've got that emergency fund built up and tucked away, what do you do with that excess cash? Well, it's time to give that money a new job. It's time to put it to work. I can practically hear what you're thinking right now. But wait, investing is risky. What if I lose it all? This is the number one fear that paralyzes people and keeps them stuck in that cash illusion, pretty much guaranteeing that they fall further and further behind. Here's the thing. You have to choose your risk. There's no such thing as a risk-free choice. With investing your excess cash, the risk is market volatility. The market goes up, it goes down. But with keeping that cash, the risk is a guaranteed 100% certain loss of purchasing power over time. So let me ask you, which one is actually the riskier move? This right here is the fundamental shift in thinking that changes everything. The goal is not to become a cash hoarder. The goal is to become a wealth builder. And you do that by turning your cash into assets that actually grow for you. So, how do you actually put all of this into practice? Let's build a simple, actionable playbook that you can literally start using today. Here we go. 4 simple steps. 1. Calculate your emergency fund number. That is your cash target, period. 2. Separate your money into different accounts or buckets so you don't accidentally spend your emergency fund on a vacation. 3. Automate the whole system. Set up automatic transfers so that extra money moves to your investment account without you even thinking about it. And finally, 4. Put that excess cash to work. Invest any money you won't need for at least 5 years into low-cost, diversified funds. Think of these like a big basket holding tiny pieces of tons of different companies. It's an easy way to spread out your risk. So we'll end on this thought. Every single dollar you own is on one of 2 paths. It's either a depreciating asset, losing a little bit of its power every single day, or it's a growing one, working to build your future. Now that you know the truth behind the illusion, which path are you going to choose?